Once the absolute high flyer on the base blockchain, the virtual protocol, is now getting absolutely hammered. It's down more than 70% in the last month. And the question is, who is benefiting from all of this? There is an old saying from the stock market: the money is not gone, it's simply just in the hands of somebody else. Somebody sold for those high prices, and those somebodies, surprise, surprise, are the whales. Now let's have a look at the on-chain metrics. Let's try to figure out whether or not it makes sense to buy this bottom, or if it makes sense to just continue holding virtual. So we're currently at $1.33. We are down 69% in the last month. We came from above $4, and still virtual is the second largest trending cryptocurrency on the base chain in terms of liquidity. There's more than 20 million. It's only beaten by the largest decentralized exchange on base, which is Aerodrome. Virtual protocol still has more liquidity than the largest Bitcoin pool. Now, interestingly enough, we see all of that price destruction. We see how the price is going down by 20% today, yet there are more buyers than sellers today. Now, the numbers aren't huge. We only have 1,000 traders on chain, but there are 53% buyers versus 47% sellers. So the sellers sell more than the buyers buy, despite the price going down. In other words, the people that are now selling are probably exiting their entire bag. On top of that is, of course, not just the virtual token itself that's going down, it's also the AI agents that have been launched via virtual that are going down. So there is AI XBT down 26% today. There is Bro down 28%. There is the game token down 30%. They're all down to very similar degrees to how much virtual itself is already bleeding. Now, the base chain is really not having a great time. When we look at the total value locked of various blockchains, then in the last 7 days, base has lost 22%. And that's one of the top losers. Only Hyperliquid lost more, and Tron is in the same ballpark. Today, Ethereum, Base, and Sui are leading the pack in terms of losses. And in the last month, Base was also not that great. So Base is pretty much one of the strongest losers in all of crypto. Now let's get back to the virtual protocol. We've got 450,000 holders on chain, and not all of those holders are created equal. So let's dive into the details. Let's see what happened here. What we've got over here is the number of retail investors versus whale investors. We're looking at those kind of charts in pretty much every video on this channel. And on the left side, we see the number of wallets that have at least 1,000 virtual tokens. Now, since the virtual price is close to $1, that's also close to $1,000. In the middle, we go at 10x in minimal holding. So that's now 10,000 tokens. And on the right, it's another 10x. So 100,000 tokens. What's happening? We see how medium-sized retail start to sell from the beginning of the year. And we can see how the whales, they accelerated their selling in the last few days. Only small retail continues holding. So it's the skilled people and the mega whales, they dump on retail. If you're now down 70%, that's because the wallets that have at least $100,000 worth of the token, they take profit. You got dumped on by the people that already have a lot of money. Virtual protocol was a transfer from the not so skilled people to the more skilled people in crypto. The interest in virtual is also declining over time. So it is not just the whales that are selling, it's also in general the number of wallets that interact with the token that's going down. This is the number of returning users over time, and 1 month ago this was still at 20 wallets per day. Yesterday that was only half that number. Now we can ignore the latest data point because today hasn't yet finished. When we zoom out a little bit, we can also see how the number of buyers and sellers peaked at one point and is now tending to decline. So virtual might not be the next big thing. Maybe it makes sense to buy some tokens just as a little bit of a gamble, but probably at some point in time there will be a new trend that's emerging. It's probably not going to be virtual, right? The profit was already taken with that rally. Now, in the end, it doesn't really matter what kind of altcoins we chose, right? Pretty much everything went down. So it seems like it's more important to time the macro than the micro. crypto, right? The individual asset selection isn't that important. It's more important to exit when prices are high and to buy when everything is depressed. But then the question is, how much longer could we fall? What we see over here is the Bitcoin dominance. So how much of all of crypto is in Bitcoin? And that tends to oscillate somewhere between 40% and 70%. When it moves from 70% down to 40%, that means that Bitcoin becomes less important, and that means that the altcoins are massively outperforming. However, when Bitcoin's dominance is going up, that means that Bitcoin holds up relatively well. It can perform better than the alts, and it might make sense to rather be allocated towards BTC than towards the altcoins. Now, how much higher could this go? Again, this moves between 40 and 70%, and currently we are at 62%. So another 8 percentage points, potentially a bit more than that. I also like this measure over here. This shows how much are the people short-term bearish on crypto. How much are they risk off? This graph shows the stable coin dominance. So not the Bitcoin dominance, but the stable coin dominance. How much of all of crypto is in stable coins? When this is very high, then the market is spooked. Then nobody is in anything risky. And when this is very low, that's the exact opposite. The market is very, very excited and wants to buy all kinds of meme coins left and right. And there is a very strong connection between the prices, right? An inverse relation. And the stablecoin dominance was at its peak. That was when Bitcoin bottomed out at 16K. When the stablecoin dominance was at its bottom, that is when Bitcoin didn't rally that much anymore. And once we saw a similar bottom in the stablecoin dominance again, Bitcoin's price also tended to not rally that much. Now, are we going to go sideways for a bit longer to then go up again, or are we going back into the 80s, 70s, and 60s and revisit those stablecoin dominances of 18%? Nobody knows. But this does give us an idea that this is potentially just the beginning of the market cooling off. The market historically had been way more risk off than it is today. Yes, I know that's hard to believe when a lot of altcoins are down more than 50%, but there have been times when people went even more into the stablecoins. And that, of course, would mean more pain ahead. Now, here's what I believe is ultra important during times like this. When it's not really clear where the market is going, we need to have a plan what to do in case things turn around. The issue I see with most beginners in crypto is that there's only a plan for bull markets, right? When there's a bull market, we follow the influencers, we try to track those influencers, we try to buy small altcoins, and we hope for those altcoins to make multiple X returns. Now, when the market turns around, when it turns bearish, then the question is, what should we do? And if there is no plan, then people simply just keep on holding those altcoins and riding them all the way down to zero. So it's very important to have a plan what to do in case the market doesn't expand further from here. To be completely objective, right? Because if there's no strategy what to do in a bear market, then the issue is that there won't be anything, right? Then you will simply just freeze up and do nothing. There are opportunities in bear markets. I actually think that it's easier to make money in bear markets than it is to make money in bull markets. For example, have a look at this. This is Balancer relative to Ethereum. This goes down pretty much all the time. And I started shorting this over here at the beginning of 2023. Now, this is a relative valuation chart, right? This is not Balancer in US dollars. This is Balancer relative to Ethereum. And so the volatility is relatively low. BAL underperformed Ethereum by more than 84%. And Ethereum didn't do that well either. And the reason why some of those altcoins go down that consistently is because of supply expansion, right? More and more tokens hit the market. Some tokens get allocated to early investors or to the team. They then get an unlock, they get a vesting unlock, and they can then sell towards the market. And this additional supply over time depresses the price. This is why we see those bad relative valuation charts, but we can take advantage of that by betting on falling prices on relative valuations. Have a look at this, right? This is Arbitrum relative to Ethereum. Also pretty much going down all the time for the exact same reason. And so if you have never shorted an altcoin before, if you never made money with an altcoin going down, or if you never made money with relative valuation short, so you just bet, say, on BAL or on Bitcoin going down in US dollars, but you never really played this relative valuation game where the volatility is much smaller, then probably you're missing out on a lot of potential alpha. Most altcoins underperform Bitcoin most of the time. So we can pretty much much diversify with short positions. With longs, that is not so easy, right? When we buy an altcoin, there's maybe 1 or 2 altcoins that go through the moon and others just go along and they're not outperforming that much. So we have to pick the few winners. But with picking losers, it's not that hard because again, most altcoins underperform Bitcoin most of the time. And so I made a lot of tutorial videos on this concept. First of all, how to think about this in the portfolio, but also how to execute on those individual trades and how to find tokens that underperform Bitcoin and Ethereum the most consistently. So there's this video over here, how to win in bear markets by shorting altcoins. There's this one, gaining from relative valuations, so not in US dollar prices, but in relative underperformance to Bitcoin and ETH. There's here, shorting optimism relative to BTC. That video was published on the 5th of May 2023. So over here, since then, the price went down by 63%. And yeah, there are also more conceptual videos where I'm making nice drawings, how to profit from falling prices, how to deposit collateral, how to borrow against this, etc. Then here's another video, my steps for opening a link/BTC short. Chainlink also underperformed Bitcoin massively since then. And so if you don't want to get wrecked like the vast majority of market participants during a potential bear market, I'm not saying that the bear market has already started, but in case you don't want to get wrecked once it does start, there will be a time, then feel free to check out those videos here, right? They're all part of Premium. Premium has more than 100 tutorial videos. It's not just about shorting altcoins, it's also about managing risk and how to be properly set up across asset classes. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like Premium, in case you don't learn anything, then feel free to message me within the first 7 days and I will refund you 100%. I know this price is not very low, but it might be low comparable to the potential losses you might make if you don't have a strategy for bear markets. And so if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in Premium. Cheers.